A few days ago, I started this series of videos about Illumin Holdings, which is a microcap stock that I just bought for my personal portfolio. Illumin is a technology company that serves the advertising industry. It has a market cap of around 75 million Canadian dollars and trades in Canada under the ticker symbol ILLM and in the US under the ticker ILLMF. Illumin offers a platform that enables you to reach your customers in the most efficient way and at the most appropriate moment. It seems to be pretty good and people are talking about it in a very positive way. We've discussed it in detail in my last video, so if you haven't seen the first part of this investment thesis, I recommend you to check it out so you can better understand what this company is about. Now, today I will explain you why I think Illumin stock is cheap. But before we dive into the subject, let me just remind you this is not investment advice. I'm just sharing with you what I'm doing with my own money, okay? And in case you're wondering how to buy these kinds of stocks, I will leave the link to the brokerage I personally use, Interactive Brokers, in the description below. So Illumin stock has seen a lot of volatility since its IPO. I mean, the stock went to 75 cents at the bottom of the pandemic crash, just to skyrocket to around $32 immediately afterwards when interest rates went to zero. And then, well, this is what happened. The stock came all the way back to $1.5, dropping around what? Dropping around 95% since its peak. Back then, Illumin was being priced at nearly $1.8 billion and traded at 16 times revenue. Now, Illumin is trading at less than 1 times revenue, more specifically at around 0.6 times revenue. And as I will show you, I think this is a very low multiple for this company. Firstly, because we are talking about a company with a gross margin of nearly 50% on average. And they've been consistently delivering this kind of margin over time, as we can see here. Normally, a company with margins like this doesn't trade at such low multiples, unless it has significant debt or its revenue is declining sharply. But that's not the case here. In fact, Illumin has very little debt and is sitting on a pile of cash. But we will get into that later. The company could also be losing a lot of money, but that's not the case here. For example, last quarter, Illumin's net loss stayed at $1 million, which, if you think about it, is not that bad, right? And in the last 12 months, their net loss totaled around $4 million, which again is not huge. And if you think about it, a loss of $4 million on the revenues of 120 is actually quite modest. In fact, I wouldn't be surprised if they soon started to become profitable once their revenue starts to grow again. So in my opinion, huge losses also don't justify the low multiple the market is assigning to this company. Besides, even though Illumin is not a profitable company yet, they are already generating cash flows. And that's huge. Really, if you look at their cash flow statement, you will see that in the last 6 months, Illumin Holdings has generated $6.1 million on operating cash flow. In fact, they are even free cash flow positive. After all, 6.1 minus 3.5, let's consider this as our capex. Okay, let's consider additions to property and equipment, but also additions to intangible assets, which I think may be important, okay? But 6.1 minus 3.5, 2.6. So in the last 6 months, Illumin Holdings has generated $2.6 million on free cash flow. If you look at their last 12 months, you will also see that Illumin has generated $13 million on operating cash flow and $9 million on free cash flow. So here you have a company in early stages trading at around 8 times free cash flow. I mean, that's very cheap, at least for me. So it's true that Illumin Holdings is not a profitable company yet, but they are generating cash flows, which is far the most important. But wait, because it gets cheaper. Illumin Holdings is trading at 6 times operating cash flow and at 8 times free cash flow. The thing is that if you look at their balance sheet, you will notice that they almost don't have debt, right? And that they have $51.5 million in cash and cash equivalents. So if we consider lease obligations as debt, and some people do, others don't, but if we do, this means we have a net debt of 51.5 minus 1.650 minus 45 million. So we have a negative net debt of $45 million. So you were paying 75 for a company that has 45 in cash. That's 60% of this company's entire market cap in cash, okay? Just to put things into perspective here. Besides, if you think about it, in the end, excluding the cash, it's like paying 30 million for a company that is generating $10 million in free cash flow. I mean, that's insane. I don't know if that sounds expensive to you, but it certainly doesn't sound expensive to me. Another factor that makes me think Illumin stock is cheap is the fact that the company has been buying its own shares at a very good pace, as we can see here. Repurchase of common shares for cancellation. So in the last 6 months, Illumin bought $4 million of its own shares. So around 5% of the current market cap. So my impression is that the market is just not paying attention to this company at all. And why is this happening? Well, I think that the macro environment we are currently in has everything to do with it. Interest rates went up by a lot and the capital just flew into the bigger names. So the smaller names are just abandoned. The smaller the company and the less popular the exchange, the more these stocks get overlooked. Besides, Illumin's revenue has not been growing. It has actually stalled. But it's not because revenue isn't growing that this company has no value, right? But the truth is that the market just prefers companies that are showing growth, especially if they are at early stages. So early companies that are not showing growth can be easily left aside. But I think that things may start to change now that the Fed is about to start cutting interest rates. I'm actually pretty excited for this event. Anyway, today I've explained you some reasons why I think Illumin stock is cheap. In the next videos, I will keep diving into this stock. Okay, so make sure to subscribe if you don't want to miss out the next videos. And again, this is not investment advice, okay? And that's it for today. See you next time.